Welcome. Welcome everyone to the channel. Guys, in today's video, we're gonna be discussing a very important concept regarding price action trading, and that is how you can time the markets perfectly. Timing is very important, guys. As you all know, timing is something where all the traders they face problems. They don't know when to enter a trade, when to exit from the trade, when to book profits, and when to book losses. So timing really plays a very important role in this market. If you want to be a successful price action trader, you want to understand how you can time the markets properly every time. I'm going to give you some tips in this video. If you implement those tips, if you understand those tips, if you practice those tips, your trading accuracy will definitely improve, and your understanding of the concepts of price action will definitely improve. So, before moving forward, I'm going to give you my usual disclaimer that all the strategies and all the techniques which I discuss in this video is for educational purpose only. Any profit and losses that you incur based on these techniques are solely your responsibility, and I'm not responsible for any profit loss which you incur. All right. So after the disclaimer, let's begin. The okay. So let's begin the core concept that we need to discuss in the video. So guys, this first of all, let me tell you that I am on a Euro US dollar forex pair, and the live market is going on right now. And I noticed something in this chart that caught my eye, and the particular pattern which is being formed in this chart right now will help you understand the concept of timing very properly. That thing caught my eye, and I decided that I'm going to record a video for you so that you can understand the concept of timing the markets properly. So just to be clear, these concepts are applicable in each and every market, whether it be forex, commodities, equities. But right now I am showing you in forex because there is a very good setup which will help you understand the concept of timing in a much better way. So as you can see over here, the market is, going up like anything. There is a very strong bullish momentum in the market, very strong bullish momentum. And we're going to be discussing how you can time this thing properly and you can take an advantage of such a big bullish move. Okay, so you see, let me jot down some rules for you related to timing. So I'm gonna write down some rules for you relating to timing, how you can time the markets properly, and you need to pay attention to these rules. Okay, so the rule number one is, okay, so here is my rule number one, and the rule number one states that, okay, great. Okay, so the rule number one states that buying or shorting will be initiated at the end of a range. Pay attention, guys. We are discussing rules of price action which are related to timing the markets properly. And here is your rule number one. Buying or shorting will be initiated at the end of a range. So first, what we need to do is we need to identify a range. Let's see over here. Let's see over here. What do we have? Is this what you call a range? This area right over here. Is this a range? Absolutely. This thing is a range which is being formed. Okay. So first rule is clear, that buying or shorting will be initiated at the end of a range. Okay. And what do I mean at the end of a range? And how we are gonna understand, or how we're gonna see whether the range is ending or not. Okay, so in order to understand whether there is an end of a range or the range is about to end, is you have to see whether the range is getting exhausted or not, whether you see candles of indecision or not. If you see that the range is being formed for a certain time and then there is exhaustion in that range, there are dojis, there are hammers, and there are other exhaustion candle patterns with long wicks, then you can understand that you can analyze and you can come to a conclusion that the range is about to end. So buying or shorting will be initiated at the end of a range. Fine. Now, and we have identified that there is a range right over here. Okay, there is a range. Now let's go to our second rule. Now, rule number 2. Okay, rule number 2 for your timing is, okay, so I think you can see now. The second rule for timing the market is study the momentum of buyers and sellers in the range. So first, we have identified a range, that our market is forming a range and that range is getting exhausted. We are moving towards the end of that range. And after that, we need to study what is the momentum of buyers and sellers in that range. Whether the momentum of buyers is more, or whether the momentum of sellers is more. That thing we need to study in that range. Okay, now I'm going to show you how to do that. So just be patient. I'm going to show you exactly how you can study the momentum of buyers and sellers in that range. Okay, now first let me tell you the third rule, which is a very, very important rule. Okay, so let's see the third rule. Okay, so the third rule is, let's see the, okay, okay, so I made a spelling mistake over there and over here as well. All right, okay, so here's your third rule. So the third rule is, see the past strength of buyers and sellers. Okay, what do I mean by the past strength of buyers and sellers? By past over here, I mean the movement which was before the formation of range, the movement which preceded the range. What was the strength of buyers and sellers in that movement? That we need to see. And finally, your fourth rule to time the markets is after doing all that, you will enter the trade. Okay, so these are your four rules for timing the market. I'm going to repeat it for you. So the first rule is buying or shorting will be initiated at the end of a range, and the way we're going to figure out the end of the range is by seeing exhaustion. Second rule is we need to study the momentum of buyers and sellers in the range. Okay. The third rule is see the past strength of buyers and sellers. By past strength, I mean the movement which preceded the range. We need to analyze that movement. Who was strong over there, right? And then at the fourth rule is you enter the trade. And here, by what I mean entering the trade, I mean at the end when there is a breakout, you enter the trade. Okay, so you enter the trade when there is a breakout. So now let's discuss these rules in this live market right over here. Okay, so my first rule was buying or shorting will be initiated at the end of a range, and I have identified a very perfect range over here. You can see resistance over here, and you can see support forming over here. Now my second rule was study the momentum of buyers and sellers in the range. Now pay attention how we study the strength of the momentum of buyers and sellers in the range. Okay, so you see my range got broke by a small bullish momentum on this candle right over here. You see the close is above the red support level. So here is we're gonna ignore these two red candles because it's just an exhaustion. You see these two upper wicks, so these two candles don't matter that much, but this candle, it closed above my support level right over here. This is a small bullish candle, and then I see a confirmation of the bullish trend in this candle right over here. Okay, this candle opened above this previous this green candle, and this candle confirmed the trend of this green candle that that this currency pair is bullish. But at the same time, I also see a upper shadow, an upper wick, which is rejecting the upper prices. So the stock is rejecting the price of this resistance. What does this show me? This thing shows me that though buyers look in strength, but there is a very strong selling pressure at this resistance level. That's why there is this upper shadow being formed. And this strength of sellers, this selling pressure gets confirmed in this red candle. You see how 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 powerful are my sellers over here. I see a longer wick which rejects the price in this candle, and then there is a red candle which confirms me that the trend is getting bearish. And this red candle even breaks my support. This red candle even breaks my support. So very high bearish momentum, right? Now majority of the people over here will become sellers the minute they see that the support is broken, they'll become sellers, which is wrong, right? Which is wrong. Because in reality, at this point, we really don't know whether this is a good sell. And why we don't know, I'm going to answer that thing later when we go on to a third rule. But see what happens again. The buyers come back. They again broke this support level and closed above. So in these two candles, what we can see that the market is testing this level, this level of 1.1407, which is a support. And then this candle again confirms the bullish momentum which was initiated by this candle right over here. And again, we see an upper shadow which is rejecting the upper prices. So at this particular point of time, we are I am confirmed that we are now trading in a range. We are now trading in a range. The magic happens at this candle, this red candle which is formed after this green candle. This red candle rejects the lower prices, as you can see. Okay, this candle rejects the lower prices. Now guys, pay very close attention. This candle rejected the upper price, okay, but showed us a positive bullish momentum. This candle, though it is a bearish candle, but it is rejecting the lower price. A bearish candle rejecting the lower price is our first hint, that somewhere the strength of buyers is little bit more than sellers. Okay, now you see the next candle, which is this one, this candle right over here, which you call a hammer. This is a bearish hammer, but hammer in itself is a very bullish pattern. And what this pattern shows us that the stock is rejecting the lower prices. Are you getting my point? The stock is rejecting the lower prices. That is being confirmed in this hammer. So what is happening, right? Guys, what is happening? Understand, in these two candles which we discussed, what happened? What we saw is that in a bearish candlestick formation, the stock is rejecting lower prices. Let me write that down for you, okay, so you can understand. Right over here. Okay, just a moment. Okay, in a bearish candle formation, okay, see, okay, let me place that right over here. Okay, in these two candles, I'll highlight that for you. In these two candles, what has happened is this. What these two candles show us is that in a bearish candle formation, the stock is rejecting lower prices. Now, just think logically, isn't that a very bullish sign? We have a hammer over here, which in itself is very bullish, and it is a bearish hammer. I mean, it is a red hammer. So the nature of the candle is bearish, but the momentum, the strength is bullish. Here we see bullish strength in the previous two candles, though the stock rejected the upper prices. In these two bearish candles, again we see a bullish momentum. So right over here, bullish, bearish, bullish again, and bullish again. Okay, and then this thing is confirmed in this very big bullish candle that the stock has the strength of buyers. So again bullish. And now you see these two red candles compared to this green candle is very, very small. Very, very small. And what does a small candle show us? That the strength of sellers is weak compared to the strength of buyers. And again you see this, your green candle is engulfing, bullish engulfing. Okay, this red candle, fine. Again a very bearish, very bullish confirmation of strength of buyers. And then this candle right over here is a bearish candle. It is rejecting the upper prices, right? But you see the strength is still on the side of bulls, right? The strength is still on the side of bulls, though here we have a bearish candle formation. And right over here you see this bearish candle couldn't break the low of this bullish candle which has been formed before. So this is a candle of indecisiveness. Indecisiveness is happening right at this point. So from here we can start to think that we are moving towards exhaustion. We are moving towards end of the range. This doji or indecisive candle confirms that we are moving towards the end of the range. This candle again confirms that we are moving towards the end of the range. And now if you see this candle, this doji, now we are sure that we have moved towards the end of the range. Now here we need to take a decision. This particular candle is where you will time the market. This is your timing candle, this particular candle. Okay, what is this thing? This is your timing candle. Here you will time the market. Okay, now we have seen that the strength of buyers is more in that range. Now guys, if you are getting confused over here, I encourage you to watch this video again and again and ask me your doubts. It's really important. Okay, so now we have seen on our rule number 2. Where is my rule number 2? Okay, okay, so my rule number 2 was study the momentum of buyers and sellers in the range. Okay, that we have seen. Now my third rule is see the past strength of buyers and sellers. All right, now see the past strength of buyers and sellers. Okay, now before this range was formed, what happened? You see these two big bullish candles. So what is my past strength? My buyers are more strong, right? In these two green candles, we can easily see that the past movement which preceded the formation of a range, in that movement, my buyers were more strong. And then finally, the fourth rule is enter the trade. So we have seen that in the range, buyers are strong. Previously, in the previous movement, the movement which preceded the forming of a range, again, my buyers were strong. So in which side we will take the trade? The answer is we will take the trade in the buying side. So once after this timing candle, we see this formation of a hammer, of a bullish hammer. This is our moment where we will enter this trade. Okay, if you are an aggressive trader, you will enter the trade at this particular candle, or if you are a little defensive trader, you will see that the momentum of this big candle which happened, which broke this resistance in one shot, and before even the completion of this candle you will enter the trade. If not, you're gonna wait for the completion of this candle and you're gonna enter the trade right over here at the beginning of this second candle. In any case, you can see the amount of profit which you have been made if you have traded this thing, right? So that is how you time the market in price action trading. Now there are certain more things which we need to discuss in timing part, but I've given you guys this lecture which I've given you right now. I discuss these concepts only with my private clients whom I teach these things. And I mean, these kind of lessons I only discuss with my private clients. I don't do it with everybody, but I thought that since I've initiated the channel on the YouTube, and I have a passion for teaching price action to retail traders. So I thought that at least this professional way of trading should be understood by you guys and other retail traders, so that they can profit and they can understand what is the psychology of the market. So these four rules I have discussed with you, and I've showed you how to implement these four rules in the market. If you understand this, this is your jackpot. Trust me, guys. This is the only way you can be in the league of professional traders and make money from this market. This is right over here. What I've shown you is jackpot. Now it's up to you how you take this knowledge and interpret, analyze it, practice with it, and make money from it. It's totally up to you. I have given you a very, very precious, and you know what you can say, a very, very um, unknown technique which retail traders don't know of, and only the professionals know of this thing, because they only trade based on price action. And I've seen that there are some videos on YouTube which say that they are price action related videos, but trust me, they are not. This is the real price action which I've shown you right now. This is what price action looks like. Okay, so be sure to subscribe to this channel, because I'm going to be uploading more videos and I'm going to be sharing more of my knowledge with you guys, so that you can profit from the markets. If you like this video, please give it a like, and share with your other friends and people who you think can benefit from this information. And okay, so that's all. It's a long video, but I've shared something valuable to you. So I think that that will be all for this video, and I'm gonna see you in my next video. Be sure to like and subscribe to this channel, guys, because here right now I've shared something very, very valuable to you all, and I'm gonna be sharing more valuable knowledge with you in the coming future. So that will be all for this video, guys. Thank you very much.